Hi everyone, a massive warm welcome to our Friday Roundup, the episode on a Friday where we recap the biggest news that's happened in the last week, maybe even what's happening today, anything consequential that affects this market. It's always fun to have a chat, provide my insights. Obviously, I don't know everything, but I'm going to tell you from the point of view of what we're seeing with our clients and just go from there and just provide any extra additional insights that we might have gleaned for some of these pieces of news, which can affect these markets quite significantly, especially the Jackson Hole Summit, which happened last week. We didn't actually have one of these Friday Roundup episodes, so I couldn't cover it on that one. But just at a high level, the Federal Reserve had its summit in Jackson Hole in the United States, and it's when they generally give the forecast of what's going on currently in the economy and where their outlook is heading. And it didn't come in too positively, but at the end of the day, it didn't really change anything. We know they're going to be hiking interest rates towards the end of this year. And next year, it's going to get very interesting what they do, because we're all quite aware that the United States and essentially the world right now is heading in towards a recession. And most central banks cannot afford to hike interest rates into a recession. So we should have a turnaround at that point. But in the meantime, markets are trying to price in a higher dollar, interest rate rises continuing, and that tightening going. So it looks like the Federal Reserve is going to continue tightening until something breaks. Now, what that something breaks is, I mean, we're discussing it today in our macro episode for our advanced clients. I won't get into that today, but it has the potential to really shake financial markets going into the next, let's say, 6 to 12 months. So stay tuned. All right, let's crack into the main news, because I want to get into a little bit of hero worship. And we covered this when Mark Cuban was getting sued by a lot of investors. We've also seen it with a few other really big personalities in crypto. Alex Saunders is another one that just they do something terribly wrong. They get a lot of followers. They can lead them astray. Now, of course, I'm not saying Michael Saylor has done this at all, but I just want to really highlight in this instance that Michael Saylor has a huge following. Everyone knows he owns a lot of Bitcoin. And if you're investing based on a large personality or a billionaire, whatever they're doing, if you're investing solely on that premise, that's your thesis, then I'd highly advise you to choose another investment strategy, because that will get you wrecked. More often than not, these very loud and big personalities, especially in the investing space, in crypto more especially, down the line, they tend to fall over themselves, and then your investment thesis completely rolls over. Again, not saying Michael Saylor that's happening to him, but I just want to paint a broad picture here, because Mark Cuban led a lot of investors astray with his tweets and his thoughts on a lot of DeFi protocols, a lot of NFTs. Now, these big players, especially these billionaires, they have a lot of expendable cash on their hands, so they can afford to take some losses on some speculative moves. They're obviously not betting the house on anything, but they're having a bit of a play and feeling things out. But a lot of people watching this video and a lot of people in this market currently, they don't have a lot of disposable income. They can't afford to lose, when you can't afford to lose, thousands and thousands of dollars just on speculative bubbles that continue to pop. And you're at the end holding the bag when the billionaire doesn't really care, or these big personalities don't really care. They're selling a product, or they're selling their time, they're improving their clout, their standing in the space. It doesn't really matter to them at the end of the day. But as an investor, you have to be so careful. And this is why we really are strong in our course in teaching you how to investigate and research and create your own investment strategy and thesis around these cryptocurrencies. What is the fundamental value that you can see, not what someone else is telling you? And I think that is so important to protect yourself. At the end of the day, you're here to protect your capital, and you're here to make gains on your investment. And that's exactly what we want to help you do. But just in a nutshell, what's happening here, Washington, D.C. Attorney General is suing ex-MicroStrategy CEO Michael Saylor. Now, he's still the chairman of MicroStrategy, who has a massive say, he's the largest shareholder. So that's an interesting headline in itself. Michael Saylor for alleged tax fraud. So if we just move on over here, DC Attorney General announced the lawsuit Wednesday, alleging Michael Saylor has lived in the district for more than a decade, has never paid any Washington, D.C. tax income. He legally owes hundreds of millions of dollars he's earned. He owes taxes on hundreds of millions of dollars he's earned taxes while living in DC. Now, this has really no impact on Bitcoin, has really no impact on his company, really has no impact on the Bitcoin in terms of his ownership and maybe even selling it to cover some of these losses. I mean, he's a very wealthy man. He has a lot of money, a lot of assets that he can sell off. Even if he wants to sell some Bitcoin, he could, but I really doubt it. To me as well, this reeks a little bit of someone going after someone very vocal and visible in the Bitcoin cryptocurrency space, because they're going after MicroStrategy as well. I guess the company may have been listed in DC when he's in another state. All that. It's just a very interesting news piece that's come out all of a sudden, especially when, you know, Bitcoin's down, MicroStrategy's down a bit, Michael Saylor's down a little bit, just trying to kick some of them while they're down. Outside of this, I don't know how valid this is. Obviously, the Attorney General is looking into this, so there is obviously some validity there. But you know, you just have to sometimes think outside the square in terms of these attack vectors that can come out of nowhere. And again, a lot of these high-profile personalities, they attract a lot of this stuff to them. Again, I don't know if he's done right or wrong in this situation. It certainly sounds like he's got something to answer for here. But just keep that in mind. These high-profile personalities are really, over the long term, are really horrible to follow for an investment strategy. I think Michael Saylor is probably different to that, but in general, they are pretty horrible to follow. Okay, I want to cover a big bit of news that just keeps popping up because it is actually supposedly happening this month. We covered this in a Friday Roundup about 4 weeks ago, so maybe a month and a bit ago. Mt. Gox, so it was the original Bitcoin exchange, Magic the Gathering exchange, I believe it stands for Mt. Gox. Back in the day, it was the only place you could buy and sell Bitcoin. Now, there was a massive hack. It went down, and investors lost so much money. It wasn't funny. Really crashed Bitcoin, 90+%. Everyone's thinking Bitcoin's dead and all that. Fast forward, we're in 2022. A lot of the people that lost a lot of money with Mt. Gox, some of it was actually recovered. And now people are going to get some of the Bitcoin that they are owed back to them from debtors and creditors. It's all going through the process at the moment. And what people are worried about right now is in the middle of the month, a lot of that Bitcoin gets unlocked to investors to sell on the market. Now, what we discussed about a month ago was that this is likely going to be a pretty insignificant event in the grand scheme of things, because there's two really important factors to know here. One, a lot of those Mt. Gox Bitcoins that are now going to be released have already been pre-purchased by large funds, large crypto investors a long time ago. So they've gone to some of these investors that lost a lot of money early on, these big funds and whatnot, and they've offered these investors a discount on the spot price of Bitcoin, but they're giving them at least money up front that they can pay them out. But they get, I guess, a certificate or ownership of that Bitcoin that eventually gets released. So a lot of this Bitcoin is already, well, it belongs to a lot of funds, large investors that are not going to sell. At least they don't have a history of selling. They scooped up cheap Bitcoin. They saw an opportunity. They don't care how long it's locked up for. Even if it gets released, they're probably just going to chuck it in cold storage. So that's how it's been explained to me in terms of Mt. Gox and what I've seen in terms of a lot of insiders that have a bit more information about this. A lot of the big firms and funds already own a lot of this Bitcoin, and it's not coming back on the market. And two, the amount of Bitcoin, let's say if the entire amount hits the market, which is, again, very unlikely, but if that entire amount hits the market, you just have to look to what's happened recently when we saw the June crash of this market. That amount that would be released pales in comparison to what has recently been sold on the market. So we saw Tesla selling billions of dollars worth of Bitcoin. We saw 3 Arrows Capital, which was a prime broker, go under. We saw a lot of other events, including Celsius and a few other investors, traders, and funds front running the issue. And we saw that huge capitulation down to about 17,500. So if this amount of Bitcoin comes on the market, the whole lot, it still is a very, very small part of what we saw just previously. So the market clearly is in a more mature state. It can absorb that kind of dump on the market. So again, we have to think in those terms. While this could be an event, just based on those two points, I think it is insignificant. So keep that in mind. I think this is just a fun narrative that loves to be brought up every now and then. But yeah, keep that in mind. It's towards the middle of the month, and we'll see how that goes. All right, let's move on to Opensea. So it's the largest and most popular NFT platform in crypto right now. It's based on Ethereum. You can go there. Very, very popular during 2021 run-up when there was just so much liquidity in the space. Everyone was buying and selling NFTs. But when the music stops, it stops hard. And very similar to the ICO boom, where let's say 99% of the ICOs, either went down 99% or went to zero. The NFT platform itself isn't seeing the volumes of users it did previously. In fact, daily volumes are down 99% from the peak in 2021. That is insane. So you can go on Opensea and just see the collections and collections and collections of, you know, GIFs, pics, monkeys, boats, whatever is up there, artwork. There's just so few people out there buying. There's so many sellers, and there's very, very few buyers. It shows that you have to be very, very careful what assets you're investing into. You have to be very, very clear-minded about where we are in a market cycle. Are we in a peak mania phase? And then you have to also focus on the liquidity here, because if you're buying an NFT asset, right now you can't sell it even if you really wanted to. You could put, you know, the lowest price you can think of, you could put on, you know, 0.0001 ETH. Is there actually a buyer on the other end that wants to buy a monkey for that price, or a GIF, or a bit of artwork? So that's the issue with liquidity. These types of assets where they are, you know, supposedly unique, it's one of a kind, there's got to be a buyer on the other end of that. And there's just such low amount of liquidity. Even back in 2021, there was a lot of people interested in buying the collectibles and the big collections, you know, Bored Ape Yacht Club and a few others like that. But a lot of the other collections, still very few buyers even back then. And it was very few people just recycling and buying and selling again and again. So very, very interesting. You have to pay attention to this, but make no mistake. I mean, this is just the start. We're going to see another run where NFT is very popular again, but it's just where we're at in the market cycle. All right, this is something that we highlighted in our monthly newsletter, and I just want to point it out again because I do expect some serious volatility coming over the next month. So just here, Ether Bitcoin could see turbulence as open interest leverage ratio soars to record high. So I'm just going to just cover this part here. Open interest is the open interest of futures contracts or options contracts on the market in any given time. It shows that a lot of people have an appetite to either bet that the market's going higher or bet that the market's going lower. When we see a lot of interest in the market, it means that there's likely going to be a big point, because a lot of big players are playing both sides, and generally they want to make a lot of money by liquidating one side of it. A lot of open interest means there's going to be movement, there's volume, and there's interest. There's a catalyst coming up, and we're seeing that with Ethereum. We're seeing really, really strong open interest, especially in futures, but more especially in options markets, which are pricing in very much what looks to be a buy the rumors, sell the news event. So an anticipatory pump into the event where price rises. So there's a lot of call options out there at the moment. So people think it's going to go higher, and they're going to take their money at the top. And then afterwards, there's essentially nothing. So there's not a lot of people thinking the Ethereum price is going to keep going up after that point. And that's generally what we see in the short term, at least. And that's what we see with a lot of these news items, or if they're moving into an event or a fundamental upgrade of a network and whatnot, price generally runs up, and then we have the actual event and the anticipation is bigger than the event itself. Then we see a sell-off, because speculators think that that's what's going to happen. It's almost like a self-fulfilling prophecy. They sell, price drops, finds a new floor, and then we move up. And finds a new floor, it will be higher than the last one obviously, but generally it moves higher. Ethereum's got a very good fundamental reason to buy it at the moment with the merge, simply because of that triple halving effect. You know, we go into the newsletter, so make sure to read it. That's in the mid to long term, though. I think in the short term, there's just a tremendous amount of speculators, and there's a lot of money still in the ecosystem just sloshing around looking for the next big pump. There's not a tremendous amount of new money coming into the system because of what's happening with the tightening of monetary policy. Okay, guys, I hope you have enjoyed this Friday roundup. Not too much news this week. I think we're all just in a bit of a holding pattern running into the merge, and also waiting on more macro news to filter it out on where the global economy is at, especially what's happening in Europe. Again, don't want to go into the weeds, but that's what we're going to cover today, and I'm pretty excited to do so. So have a great day. We'll catch you again next week for our Monday market update.